Good morning. Today is Sunday, April 14th, 2024, and this is the weekly Bitcoin price forecast. So looking at where Bitcoin went in the past week and looking at where it could potentially go in the future. So this is week 52. This has been 1 year of making these videos and just seeing literally how Bitcoin could progress over time. I mean, I made this last year after I looked at the market and kind of had an understanding of where Bitcoin was going to go. Like I had this idea that this was going to go very high just by looking at the patterns, looking at the how periodic the Bitcoin is. It's very cyclical in nature. So just like following those patterns and taking them out to their logical conclusions. And so far, it has played out almost exactly how I expected. Maybe not in a time frame wise. I mean, I actually did think it would happen a little bit sooner, but it's one of those things that sometimes things don't go exactly your way, but you're glad that they didn't go your way. So that's where I'm at. So either way, I still see so much opportunity of ahead. Pretty much. I mean, we ran about 160 something percent last year. That's a huge run for any asset class, really. But it's even more impressive when you think about what we're going to do in the coming months and maybe even a year from now. Taking a look at it, we are coming right up on the Bitcoin halving at this point. That is happening in less than a week. So the next time that I make a video like this, so week 53, we will be in a completely different market regime, pretty much. That being because the supply dynamics are about to change completely. So once you have a Bitcoin halving, unlike other things, this is programmed, and it cuts the daily issuance in half. And it's not even the daily issuance; it's the block reward. So every time a Bitcoin miner mines a block, they get a reward. It used to be 50, then it went down to 25, 12 and a half, 6.125, blah blah blah. And I think now it's about to get cut to 3.5 Bitcoin per block mined. So miners will get less reward, but again, it's a higher Bitcoin price, so it kind of ends up balancing itself out. Lower supply ends up, meaning that there's less of it on the market, and then that also meets up with a rising demand. We have these ETFs now. Hong Kong is about to release an ETF, so truly, this is the perfect financial storm. I've never seen anything like it. Never seen anything like it. It's an amazing time to be around, an amazing time to be in the markets for sure. But we will look at. I actually got quite a bit to look at today, so I mean, this one will be probably longer than normal. But we'll take a look here. So this is the monthly chart. The monthly chart this is the first down month that we've had in quite a while. And again, it's only midway through the month, so we don't know how that's going to shape up, especially with the halving being right around the corner. But seeing this, obviously this is the first down candle that we've had really since August. So we had 7 months of going straight up. And now we've come down, and it's even crazier because a lot of this down slope happened literally yesterday, within the past couple of days, maybe Saturday and Friday. And it's weird because obviously Bitcoin moves over the weekend as well. Unlike other assets, like it's still moving on Saturday and Sunday, but usually you don't see a big down spike like this on a Saturday. So this is going to cause a CME gap, which is basically a Chicago Mercantile Exchange. They trade the Bitcoin futures from Sunday to Friday afternoon. So I mean, it kind of shuts down. It's 24/5. It kind of shuts down on the weekend, and so what will end up happening is price will probably end up coming back here and retracing, and then potentially going back down or just blowing through it. We don't know. We'll have to see what the price action is on Monday morning. But as you can see, we've really been in a range here. We've been in a range here lately between about 64,000 and 71,000. So really haven't been able to break these 74,000 highs and continue on to the upside. So where are we at here? Let's talk about the halving. I mean, we already said the halving is pretty much coming April 20th, 4/20/2024. So that's in 6 days. It happens every 210,000 blocks. So as you can see, we'll be at block 840 when this happens. So I don't know what the current block height is. I'd have to look that up, but we're like 99.99% of the way to the halving. So 5 days, 11 hours, 25 minutes, 42 seconds, and a constantly changing amount of milliseconds. So it's cool. These are very interesting times to be able to watch this and watch it play out. So again, we've talked about the area that we're in. One other thing that I'll need to talk about and mention on, because this has been an interesting revelation to me in the past couple weeks, is the bank term lending program. It is a program that was set up in March of 2000, last year, a year ago. After the, I think it was like March 12th, they came up with this. So after the collapse of Silicon Valley Bank, after the collapse of Signature Bank, First Republic Bank, the government stepped in and said, hey, we're going to create a program specifically so that we don't tax the Fed in this regard, and that we don't, overstress the system with all these bank failures. So if we look at it, we had, this is early 2002, probably .com bubble era. You had 2008, which we had all these crashes. So the biggest one here was Washington Mutual Bank, $307 billion. IndyMac was $32 billion. Colonial was $25 billion. You got a whole bunch of double and single digit billion, or even 3-digit million numbers. So like 9-figure banks, so on and so forth. So yeah, that tapered off after 2008. Quantitative easing and whatnot. The government stepped in to put the brakes on these failures, but then we never actually fixed the problem. So this whole period, we were in like almost a 0% interest rate regime. So free money. But then what happened in 2022? We started increasing rates again. We started increasing interest rates, and that makes it harder for banks and a lot of people to make money, because that's another tax on your system pretty much. So what ended up happening is you have First Republic Bank, Silicon Valley Bank, and Signature Bank. If you look at the numbers here, $229 billion, so 230, $209 billion, $110 billion. These are big failures. This graph is kind of deceiving in a sense, in that Washington Mutual Bank, it looks like, oh, okay, well, there's way more failure over here. But if you add all these up, this was actually, around here was an actual bigger failure than 2008. So the government had to step in pretty much. They absolutely had to step in and do something about it. But again, we have never solved the problem. What ended up happening was the bank term funding program. So this was something that was introduced last year. If we zoom all the way out, 2004, blah, 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 and then we see the spike here. So it didn't exist. It didn't exist before there. And then we'll look at this. So this was it. It started on March 12th or early March of 2023. And it shot up and kept going all the way until about June. Had the major rallies here, and then kept on going that way. And then it just stayed flat for quite a while, from about late June all the way through the end of the year, really. It started a little bit of an uptick in late October, but then it really shot off going into the end of the year next year. Paused for a little bit, and then the program ended in 2000, actually a couple weeks ago, so March 13th. And then it kind of went down here. So why do I say all that? What does that remind me of? So if I look at the price chart for Bitcoin, January was fine. It started going up, and then around March we had this major spike. Silicon Valley Bank failed right here, and then we had this major spike. This candle right here was actually the one that got me back in. It got me into the game fully. And then we had this lull period, the 6-month lull period. So it went up all the way through, April, and it tried again in June to get up there. But this whole period was kind of a flat period. So you had up, flat, up, and then now we're kind of up at the top where the program ended right here. Flat again, down. So again, I'm going to watch this one more time. Up, flat, and then down. What does that remind me of? We had this period of going up, and then it was flat for a long time. It went up again, flat, and then down. It is very interesting to see how closely that the Bitcoin price has followed the liquidity that has been provided by the bank term funding program. It was an interesting revelation to me for sure. Something that I wanted to dig into a little bit deeper, and another metric that I wanted to watch, because liquidity is truly what moves the markets. If we're being honest. So this is what we're looking at on a weekly chart. We came down here and swooped all the way up. Again, we have our 4th Bitcoin halving right here in 6 days. And since then, we've kind of been stuck for about a month here. We've been stuck in this range. Part of that has been due to the rebalancing on the Bitcoin ETFs. But again, that's not going to hold up for too much longer, because Grayscale is going to start running out of Bitcoins to sell. Let me see what else. Yeah, Grayscale's going to start running out of stuff to sell. We've talked about the bank term funding program ended. We have the halving coming up. We have Hong Kong releasing ETFs pretty soon, so it's going to get really crazy in the next couple months. That much I do know. But I'm excited. No, I'm super excited because like this is one of those things where this is a rare opportunity for people to make crazy life changing money. Maybe not exclusively through Bitcoin. There's a lot of other crypto opportunities, but this is gonna be interesting. I got to make sure that I'm paying attention to Bitcoin because it allows me to see what the rest of the market is doing. So dialing in, this is the daily chart. We broke this long-term resistance way back when. We have these two zones down here. We've really just been in a range. Like we had this consolidation cone here, a little up and down and up and down and up and down. And then really, if we look at it, we're almost in a block. Where I want to do that parallel channel. So if I go from here to here, you kind of got a block here, just like that. Here's your range that you're sitting in. Up, down, up, down, up, down. You see it came and smacked the bottom of this and then just kind of turned around. So it went all the way down to 60,000 and then recovered back to 64. So again, it kind of just blew through the bottom of this consolidation channel. It blew through the 50 moving average. You still have the bottom of this range here. You have the 100 moving average. There's a small, I think it's about a 4-hour zone that's formed here. I don't see that as being too strong, but I also don't see it going too much further than that. So let's say worst case, we get down to 56, maybe 55 or something like that. The interesting part too is it'll also kind of depend on how this bank term funding program goes because it was released, it was stopped about a month ago. If we look at it, let's take a look one more time. So it ended here, March 13th. So let's look at what happened around March 13th. So that was a Wednesday. Okay, we hit a peak. That was the all-time high. March 13th was our new all-time high, and then guess what? It came down. And then it tried to recover again and did a little bit of rally. It came up to the top of this range. It came down. So it really, since that program ended, we have not been able to make a new all-time high. I'm not saying that that's causal, but I am saying that it is interesting. It's a point of interest because like we're pulling liquidity out of the system at this point, which hence means that the markets will not move as much. And I'm seeing the same thing in the NASDAQ too. The NASDAQ has not moved too much since this program ended. So it's interesting to see what the liquidity problem, not even the problem, what the liquidity situation is going to look like over the next couple months. I am under the impression that that the Fed will probably turn on the money printers in the next 2 to 3 months, or maybe they'll extend the bank term funding program, or maybe they'll come up with something new. I don't know. But it is something to watch pretty carefully because, again, we don't want to put ourselves in a situation where, we have more bank failures, which, and do all this other stuff, because that was the whole reason that we created that program in the first place, was to mitigate bank failures so that we don't have all this, different type of stuff. We've lost a lot of small regional banks over the years since 2008, a lot of them. And that trajectory is continuing. So we'll see. This is, if you were shorting, like you had the opportunity really to short all week. If you wanted to, like, coming up to the top here and then boom, short down here and short down here and then short all the way down to the bottom of the range. So, this is from top to bottom, probably about, that's a $10,000 range. So, that's pretty good. That's good money. That's good money if you're able to take advantage of it. Like, if you're a trader on the short side, or if you have, futures positions that you could do to the downside, like that is something to look at for sure. Actually, let's see that was coming from up to down. So it dropped from top to bottom 16%. So 11,000, almost 12,000 it dropped. So yeah, that's pretty hefty. That's pretty significant. The crazy part is a lot of this happened over the weekend. So that was Friday. This is Friday it dropped down to here. It recovered a little bit and then it dropped again. So like all this for sure is bearish. But again, we're also in a range. So I'm hesitant to call it bearish just yet. I think we're going to shoot up, and this is going to exacerbate everything right here. This fourth halving, supply is going to get cut in half. Daily block issuance is going to get cut in half. We're going to see some interesting times, people. Some interesting times for sure. So I don't have too much else to talk about at this point. We have just recently launched Pulse on Crypto. That is our new Discord server, and it is our kind of media outlet for all things crypto. Just kind of the next stage of the evolutionary process of whatever we're doing here. And it's something that we're following day by day for sure, building it as we fly. Again, thank you to everybody who's watched over the last year. It definitely means a lot to me, even if it was one view. That all adds up. It definitely adds up. So this is something I'm going to continue doing. Yeah, we're going to follow this one through to completion for sure. So again, I appreciate everyone who's watched. This has been Chris Talks Crypto. Check out our crypto-based resources on christalkscrypto.com and follow Pulse on Crypto. I will see y'all on the moon. Take care.